Hi everyone, this is Prashad Parthiban. Today I'm going to take a short training on catastrophic modeling, sometimes called as CAT modeling, in property and casualty insurance. Before looking at catastrophic modeling, let's look at what do you mean by catastrophic loss. Every time when there is a loss due to one of these listed items like hurricane, wildfire, earthquake, flood, then we term that as a catastrophic loss because the loss could be very huge, and at the same time these are not a common losses. Like if you take earthquake, that's going to be very less frequent cause of loss. It can happen 10 years once or 8 years once. So the insurance company may not have huge amount of data, historical data, to know the probability of loss in the future. That is the reason why we categorize this kind of losses as catastrophic loss, because of the fact that these losses are very unique. We also need to have a different way of calculating the possibility of loss. That is where we call it as catastrophic modeling, which is otherwise called as CAT modeling. Now, we have seen what is mean by catastrophic losses. We have seen at a high level what do you mean by catastrophic modeling. Now let's see what are the input parameters that we need to send to this modeling algorithms. The first and foremost input parameter is geocoding data, which means the address data. Say, if you are insuring your home, what is your address? So that, or if your company, what is your location? That way they can calculate the distance between seashore or whatever the risk parameters, and then kind of recommend you the required end process or end recommendations. The second kind of information that you need to feed to this catastrophic modeling is physical characteristics of those exposures. Say, if you have a home, how many stories you have, what kind of materials that you are used to build that home, something like that, so that this model can determine the possibility of damage to your property or anything else. Final point is financial terms. What kind of coverage are you planning to give for this particular policy? What is your limit? What are the deductibles? So those kind of data has to be sent to this catastrophic modeling. Now, what is the output? Based on this input parameter, when the models are processed, you are going to get the overall estimate of losses. Like, okay, for this particular input parameter, these are the estimators of losses. Now, we have seen what is the input parameter. We have seen what is the output parameter. Within this center box, catastrophic modeling, what happens actually? So, what happens is the system automatically runs these four modules that you are seeing. One is the event module. The second one is the intensity hazard or hazard module. The third one is vulnerability module. And the fourth one is financial module. What is event module? So this will make sure to run all possible scenarios. When I say scenarios, all possible events that can happen that can damage your property, and then kind of recommend you or share you the possibility of loss. The second module is hazard module. As most of you know, the hazard is the chances of increasing the risk. Say example, if you have a home which is closer to your seashore, then the chances are very high. That's what we call it as hazard. The possibility to increase your chance for risk. So when you run this module, you know, okay, what are the higher chances of having this catastrophic losses? Vulnerability module. So when you run this module, it will tell you the total damage that it can have when a particular loss happen. So that is what we do it in vulnerability module. Financial module, the total loss amount that the insurance company may pay in the future for this particular input parameters. So in total, we run all these four modules, come up with the actual end results, and then produce the estimate of losses for an event or a set of consolidated events. That way, the underwriters who works for that policy can know, okay, this is the possibility of loss in the future for catastrophic issues like flood or hurricane. And if the customer needs flood or hurricane, then we can charge them the required premium based on the estimated losses. I hope you like my training videos. If you like my training videos, please do subscribe to my YouTube channel. Have a great day. Bye bye.